I want to go to Chicago and find out what's going on at the source, where we have Scott Gecas at the edge of the trading floor. Now, he is with Walsh Trading. Let's talk about what's going on here in the grain markets heading into the weekend. Scott, what do you see from your perspective?
Well, the volume is absolutely really light just across the board. The only market that we've been looking at that has a little bit of volume is in gold, which is not too surprising because it's been all over the place. But, I mean, the S&P is hitting record highs on light volume, very concerning. All the rumors coming out as far as the grains go, with China being a more aggressive buyer if we get a little bit of relief on the tariffs. So we have to wait and see how that's going to go. We expect some profit taking or covering going into the weekend. I think that's why you're seeing the beans come off a little bit. But the one thing I want to make note is there's a huge cancellations, about 583,000 tons of cancellations to unknown destinations. That's something that there's really not getting too much press. A lot of people are not really talking about that, but that's very significant, especially when you're seeing rumors coming out saying China's going to be a more aggressive buyer. Now, they did say unknown destinations, but who knows what that's really going to be. A large chunk of that is expected to be China, so we have to wait and see how this is really going to be going. But going into the weekend, I don't expect people to have too many positions on. At least I would not expect or advise anybody to hold significant amount of premium or pick in direction holding it over the weekend. So now, one thing I want to make note in all the grains is the option flow. Coming in on Monday, the option skew was definitely skewed to the calls. The beans had a very heavy skew, over $4 worth of skew on Monday. Wednesday, completely flattened. Today, it's more or less flattened. In beans, you're seeing about a 50-cent skew to the upside calls. In corn, you're only seeing about a 25-cent skew. So it completely flattened. That just says to me that people are taking positions off and really not playing too much direction.
All right, Scott, we'll come back here in a moment, and we'll take a look at our cattle and hog market activity heading toward the weekend there as well, in advance of some USDA numbers coming out after close. We'll talk about that when we come back. We're talking right now with Scott Gecas of Walsh Trading in Chicago, and I want to turn our attention now, Scott, to the livestock trade. Did you see the new, the new cutout values on the beef and the pork that came out at midday from USDA? Wow. On the beef cutout values, we were higher once again, so the string is unbroken of at least one or the other being higher here for the past week. Choice cuts up 35 cents, selects up 63 cents, but the big news was on the pork side of the ledger. Look at this. Carcass value is up over $4 this morning. 78.70 is the last price per hundredweight. The loins now up $1.40, hams up $4.27, and the belly market gained $14.41 this morning. And so that price is at $124.84. That made big strides back to where it was about a week ago. I see a week ago it was around 126, I believe. So what's going on here with the livestock trade? Everywhere we look, the futures are higher today, Scott. How come?
Yeah, well, as far as cattle go, you run into the correlation with a stronger market in the equities, so it's definitely following suit. But the bigger thing is, cutout values continue to rise. Cash trade is on the uptick between 108 to 110. It's definitely supportive. It's still in a strong uptrend. Even with a little bit of negative news, it still remains in that uptrend, holding those prices steady. The slaughter concerns are no longer a factor. Slaughter rate is still holding heavy. So, the cattle market is in good shape to continue. We're just keeping an eye on that 115 level. If we can close above that 115 level, I expect a little bit more buying interest, and we could start to get a little bit more ramp up. In the hog market, completely different story. It's completely tied to U.S. production is at all-time highs. That's a little bit concerning, and that's why you've seen the market pretty much go waffle back and forth. Yesterday was down a little bit. Today we're starting to pick up a little bit more steam. But the overall exports are at record levels. Mexico's starting to import U.S. pork, so that's definitely a good sign. We expect the Asian countries to continue their import campaign. The Chinese pork prices continue to rise. They're up 43% just on this month, over 200% year to date. That's definitely a good sign, too. That is adding a little bit more upside premium to the deferred contracts as far as call skew. Not so much in the near term, but definitely in the far term.
All right, let's run through these and get everybody updated on the current futures. On the live cattle trade, we are higher across the board. December up 93 at 115.65. And I believe that's about where we were last half hour. On the feeder cattle market, We currently have November trading $1.45 higher at 145.63. That's on the high of the day. And on the lean hogs, we currently have the December up $1.03 and February up 133 at 74.80. Thank you for visiting Scott. I appreciate it. Scott Gecas of Walsh Trading. He's located in Chicago.